Joining us on Skype, we have Todd Preston with Davidson here to talk about this week's stock market news. And Todd, we're going to start off with yesterday. It looks like we saw a slight gain across the board. Tell us about it.
We did, yeah. We saw actually quite a big gain earlier in the day. The market had rallied pretty strongly. There was a 500-point swing in the Dow between where it opened and where it finished. So up really strong and went negative for a while, and then finished a little bit positive, up 52. The S&P is up almost 10. NASDAQ was up almost 40. Primarily driven by the fact that the House Democrats had brought their fiscal package. They took $1 trillion out of it. Trying to get negotiations going. Still almost $2 trillion more than the Republican fiscal package. So still quite a big gap. Hope was that they might see some movement, but there's now speculation that we may not see a stimulus package pass until after the election. If that happens, that creates again that uncertainty the market doesn't like. So I think we'll continue to see volatility.
Yeah, it's all about that compromise, but it's certainly looking to head into that November direction.
Yeah.
All right.
Yeah.
So, you know, I hear there were some economic reports posted yesterday. What did you see in those?
So the jobless claims came in. They were a little stronger than anticipated. We'd anticipated 850,000. It came in at 870,000. That was a little stronger than analysts had expected, and a little stronger than had been in the previous couple weeks. So we're still under 1 million, which is a big number in light of the COVID-19 still being as prominent as it is. So hoped for a little better number. It wasn't quite there. So we'll have to see how that, and then they adjust them again, remember. So we get the preliminary number, then we get the adjusted number. And if they adjust that better, then that's great. If they realize that it was a little off, then it makes the job market look that much tougher. So still some uncertainty there.
And let's finish off by talking about housing. What are you seeing there?
Housing kind of exploded. We saw annualized housing starts, single new homes at a million per year, which is the highest it's been since 2006. So, and compared to last year, it's up 43%. So, very strong housing market, driven, of course, a lot by low interest rates. Again. The housing market really does drive a big piece of the economy. So that's good news. Plus, Fed Chairman Powell did indicate yesterday that he believes that we do need to see a new fiscal package come in. And so they've said they're going to be very accommodative. They're going to do everything they can to keep the economy recovering and moving forward. So some good news mixed in with the bad news. All in all, got that dang election to worry about. So that's really kind of got everyone's attention.
Yep. All right, Todd. Well, thank you so much for your time this morning. We sure appreciate it, and have a great weekend.
Thank you. You too.
Thank you. We'll be right back after this break.